Hello viewers, I am Sanjeev Pandya welcoming you to another episode of the Tax Time. Your taxes matter. It's tax time, we all know it, and we are in the middle of tax season. To file taxes is really important thing, and everyone must file taxes, whether you are just on your own or you have a corporation, you're owner of the company or you're part of the company. Make sure the taxes are filed. But once the taxes are filed, there is a one fear that a lot of people have, it is the IRS tax audit. And then just the IRS tax audit just itself can scare many people off. So IRS tax audit, what is IRS tax audit and why IRS tax audit is out there? So we're going to get all the information that you need to know from Mr. Ajay Kumar, CPA of Sai CPA Services. Once again, he has joined us in the show. Ajay ji, welcome to the show. How are you?
I'm good, Sanjeev ji. Thank you.
Very good. IRS tax audit. Like
Yes.
I say that everyone gets scared with that
It is a scary
title
thing.
only. And you being CPA, I'm sure that you must be helping out many clients.
Of course.
Throughout the year when it comes to IRS tax audit. Why do IRS tax audit?
That's a wonderful question. So the intent behind the IRS audit is to find out, to make sure people are doing what they're supposed to do. People are not claiming unnecessary deductions, unnecessary expenses.
Ji.
So if you call IRS, a lot of these audits are referred as random audits.
Ji.
But how does IRS decide who to audit? How did the randomness is decided?
Correct.
Is the tricky thing. If you look at the statistics, only 0.5% people got audited for their 2017 taxes that they filed in 2018. 0.6% to be exact. So if you think about it, out of 150 people, 1 person got audited. So it's really not random, even though we call it a random audit. But let's understand what the audit actually is first, and then we get into the details.
Correct.
As why does IRS audit? So a typical audit is decided by a computer system. When people file their taxes, all this information get into this, say, supercomputer. Then the computer is deciding based on the statistics if all the numbers that this person is putting in are in the right range or not. Then a lot of these audits are just a ladder that the computer is generating automatically for the taxpayer. We looked at your tax return, your deductions are much higher than what they're supposed to be. Please send this proof. Say, for example, if somebody's income is $100,000 and they claimed $50,000 in donation, is that wrong? Technically not. They have the right to claim up to 60% of their AGI as their charitable deduction.
But is it real or
But
not? That's
exactly,
what they want to know.
the number is too high. So technically it's correct.
Ji.
In truth, you may actually have donated that money.
Correct.
But the computer system will generate a letter, please submit the receipt, show us the proof. In a lot of cases when we do these type of taxes, and since we do a lot of audit defense, we have a lot of clients that we have picked up
Ji.
due to audit defense only.
Ji.
So in these cases, the key is when you have an expense, a deduction that's out of range, you submit the receipt, you submit the proof of that deduction along with the tax return.
Ji.
So the system will say, 50,000, but I see the receipt. Then they will
Then
not
it's
generate
okay.
the audit for you.
Okay, so basically let's just summarize what you just said. These IRS tax audits are generated by computer in IRS office. So they must have been programmed such a way that if person's income is X amount and if person's deduction is Y amount, then then the question would be the why is it like that? Why is it not matching up? They must have used some kind of formula, some kind of statistics to tell the system that when you see something unusual, immediately put a red flag on it.
That's one type of audit, Sanjeev
Ji.
ji. The computer system generated audit is one type of audit.
Correct.
They have a team of auditors,
Manual audit.
manual audit,
Really?
depending on how far are you from the stat.
Acha.
So we know out of 100,000 people who are filing taxes and their income is between 80,000 to 100,000,
Ji.
their donations are typically this much.
Ji.
And if somebody is donating much more than that, then it's a computer generated audit. But then there are corporations where the statistics are not as exactly clear.
Correct.
And the differences are huge. So the computer system is not deciding. Computer system is red flagging that return,
Ji.
and an auditor is assigned to look at the situation.
Correct.
That's manual audit. That's
Okay.
the next stage of the audit. And if the IRS cannot help justifying the expense, or the taxpayer and the IRS are not on the same page, then there is an IRS tax court that helps decide who is right.
Absolutely. Now, when let's say if somebody gets a notice in the mail from IRS and it's a tax audit, what are the steps? Do they first give you a chance to give them a call and over the phone to see it can be resolved, or do you really have to go in person to IRS office or IRS tax center and talk to auditor?
That's a great question. In most cases, you don't really have to go to IRS office. The worst thing you can do when you have such a letter, to not respond to it. The very first thing you want to do, there is a number, phone number listed over there, you call that number. Try to understand the notice, or take that notice to a competent CPA. Understand what's needed. Then you find that support. For example, in, the donation, you really have the donation receipt. You really donated the money. So you find that support, put it along with the letter, follow the steps. They will list the steps over there, what you need to do, and send it to the address that they want you to send that support. And then you can sort of move on. And after 30 days of sending the support, I suggest you call them to find out, to make sure they got the support and everything is clean over there. Don't just assume. IRS gets millions of mail every day.
Okay.
So the last thing you want to do, oh, I called IRS and this is what they told me. There is no record of this conversation that somebody told you this thing. You want to put everything in writing. You want to make sure you understand the notice. You respond to the notice via certified mail. So you have a proof that I submitted this response on this day.
Okay, so that's the first step to do. So what I'm trying to do is I'm trying to clear a myth that first of all, IRS office or auditor from the IRS will never call you at home to say that your tax return is being audited. That will never happen, right?
Well, if you own a business, IRS auditor can come to your home or place of business, leave their card and say you need to call us. They will never ask you to pay the money. They will never threaten you to deport or the jail time or you pay me now or else. That never happens. But IRS auditors have the right to come to the business place, your home, if that's listed as your business address, or the place of business.
Can they come unannounced? Can they come without?
They typically will come unannounced.
Really?
Yes.
Wow. Okay. Unless then it must be very major audit. Then I guess
there has to be a mismatch of information. There is nothing major or minor about it. It's more about what you reported and what the IRS knows about you.
Okay.
They are not matching.
Okay. I see. All right. With that note, we're going to take a break. You're watching Tax Time. We'll be right back after this message. Welcome back to the second segment of the Tax Time, Your Taxes Matter show. This weekly show brings you all the updates, all the information that you need to know related to taxes. Of course, it's a tax season and tax time, and who doesn't really want to know additional information? So that's what we try to give you all the information that you really need to know, of course, with the help of Mr. Akumar, CPO, Sai CPA Services. In today's episode, we're talking about IRS tax audit. About 8% of corporations are being audited.
Absolutely.
Okay, and then the people making over $1 million, there's a certain percent, about 4% of that?
Yes, about 4.4% of the people who are making more than $1 million are potentially being audited. And if you think about it, the way the IRS is looking at it, wherever they have potential to collect more money, that's where they're auditing more.
Okay.
If somebody is making $10,000, there is not enough money for the IRS to push that person back to do the audit for that person, and how much money can you collect?
Correct.
While on the other hand, if you are making $1 million, potentially IRS can collect a lot more money from that person.
Okay.
So in general, in total, as our viewers can see, the audit rate is 0.6% for everybody added together. But people who are making more than $1 million, for them the audit rate is more than 4.4%.
Okay. As we, before we go into more details on the factors affecting audit, IRS tax audit, one of the gray areas in IRS audit is number of dependents, because I have read about it, some places that people usually claim more dependents they usually have. And a simple excuse coming from them would be, oh, I didn't know what dependents exactly mean. So dependents is kind of gray area.
Well, it used to be, not anymore.
Not anymore.
All dependents are tracked via social security number. The IRS system will not accept a tax return with the same dependent information that's already been claimed on a different tax return. Say,
Correct.
take an example, husband, wife, 2 children. What used to happen, husband claimed that the 2 children on a paper return, wife claimed that the 2 children on the same return.
Exactly.
But now, once somebody has claimed one social security number,
Correct.
one dependent,
It cannot be
that
repeated.
same dependent cannot be claimed.
Okay.
Your tax return cannot be filed.
Good. What are the other factors affecting IRS audit?
Well, IRS audit is all about gray area, what we don't know. Say, for example, cash intensive businesses are prime target because they potentially have room for gray area. Say, a restaurant, typical ethnic restaurant, they collect a lot of cash. Laundromat, they collect a lot of cash. So it's hard for IRS to determine if everything that's collected is being reported or not. Anything that's done via bank, IRS gets this 1099 reports. Anything that went through the credit card, IRS gets this report, 1099K, and everything gets electronically reported to IRS. So IRS can easily see, hey, you collected $100,000 on the credit card, so you should have had at least $100,000 of revenue. But how do we know? How does the IRS know how much cash you collected? In that case, IRS is more cognizant, more cautious about finding those businesses where cash is primarily collected. So
Okay.
cash intensive businesses are one factor where we try to audit more than less.
Okay. Now, when they do that, let's just talk about the success rate,
Right.
between IRS and the taxpayer.
Absolutely.
When the audit note has gone out, what are the chances is that IRS will accept, for example, just an example, will accept their mistake and say, yes, you did everything right, and it was our fault, and you're fine, free to go.
That's a very, very common question. That's a wonderful question.
Right.
So it depends how old is your business. How long have you been doing it? Have you done it first time? Is it your first year in business? Or have you been a repeated offenser? Have you done it for multiple years? Then we have to see, have you been audited earlier? If we audited you earlier, you have been doing it for multiple years, we told you last year, the last year, and you're still doing it, then there is no room. Then we have to do what we have to do.
Okay, very good. Now let's just talk about types of tax returns that they are being audited.
Well, IRS audits all type of tax return. There are mainly 3 type of tax returns, 1065, 1120, and Schedule C. Schedule C is the highest audited tax return in any type of tax return. Schedule C is mainly for self-employed, small businesses. Oh, I have this side business. So the business is not formally incorporated, but I have this business, and the gray area over there is a lot of hobbies are seen as businesses. The difference is the way the IRS looks at it. What's the intent here? Am I trying to do it to make money, or I'm doing it on a side? So I'm an accountant, a CPA. This is how I run the family. This is how I make money. But if I'm doing cooking classes on the side just to feel relaxed or just to make myself happy, is it my business? Am I trying to make money out of it? What did I do to make money? Did I do some advertising, or am I just cooking on my spare time? So the intent has to be there if it's a business, otherwise it's seen as a hobby. So that the trick is, the way the IRS looks at it, all the hobby investment, all the hobby losses are not deductible. It has to be a business with an intent to make profit in order for the expenses to be deductible.
Okay, and when this IRS audit, let's say IRS audit occurs, and suppose there is a mistake on a tax return, and they have to pay X amount of money, I guess, whatever that they owe to IRS.
Right.
When they go to pay that money, interest and penalties included in that part, or it's waived?
Interest and penalties are typically separate than the actual tax liability. If IRS were to waive interest and penalties for everybody, then nobody will report the right number in the first place. Hey, what's my worst case scenario?
Correct.
I have to pay $10. Why don't I pay 5 now? In the worst case, I'll pay 5 later. But the interest is never waived. Penalties can be waived in certain cases where the taxpayer can justify that there was a legitimate reason. I did not know. This is my first time. Or I did not have the right information, or I did not know my ex-wife had claimed my son.
Okay.
So there are certain situations where you can get the penalty abated, but the interest typically is not abated. The interest will always have to be paid.
All right. With that note, we're going to take a break. And when we come back after the break, we're going to talk about IRS phone email scam. I don't know if you've ever been part of it or not. And we're going to find out more information why IRS tax audit from Mr. Akumar CPA right after these messages. Please stay with us. Welcome back to the third segment of the Tax Time. Your taxes matter. Such an important topic that we have in today's episode, why IRS tax audit. And Mr. Ajay Kumar, CPA of Sai CPA Services, has been giving out a lot of information that we all need to know, because once you file a tax return, of course, concern is always there. What are the chances that my tax return will be audited? And if it's audited, then how much penalty will I have to pay? The question is to do the right thing and try not to do the wrong thing, because even if you've been doing wrong thing and if you think you can get away with it, it's your luck. Right? Now, anything else you want to add before I ask you a question?
So one prime factor is not reporting the whole income. So a lot of times people don't realize it.
Yes.
Everything, the interest income, the W-2 income, the 1099 income, the 1099K, merchant service income, all gets electronically reported to the state and IRS. Now consider a situation, you are making $100,000 and then there was $20 of interest that you got from the bank and you did not get the 1099 INT and this interest was not included. So a lot of audits happens because a part of the smaller part of the income was missed out of the tax return. Now somebody is assigned to your case and now they are looking at every single number. How much is the meals expense? How much is the home office expense? How much is the property tax expense? And they will typically find something more than something else than they started the audit for. A lot of these audits starts because the taxpayer missed a small item.
To skip $20 income, right, you may end up paying $200 or $2,000.
It's not uncommon. It's very, very common that a lot of these audits start with something nuisance, something very, very silly. I did not realize it. Oh, it was too small. And then the auditor ends up finding, why do you have so much meals and entertainment expense? Oh, you're making $2,000 in business and $20,000 is the travel expense. You have this car and you are driving this car, 100% use of the business vehicle is very common. But if you did not have the business, you still need the car. So how can the car be 100% being used for the business? So the audit will start with something else and the auditor will always find something else in a typical audit.
Bilkul. So I think what it's safe to say, what does IRS stand for?
Internal Revenue Service.
Okay, based upon what you just said, of course I know that, but based upon what you just said, we can say that Intelligence Revenue Service.
Absolutely. It's a computer system, highly sophisticated computer system that's tracking for you what income you are making.
Correct.
In a lot of cases, IRS knows more information about you than what you know about yourself.
Correct. Now, in reference to that, if IRS knows more on everybody than we think that we know while we are reporting income and expenses and everything, can you share a real life example, based upon all your 20+ years experience and IRS tax audit that you do, many of them? Can you share one example which can be a teaching lesson for our viewers?
So we do a lot of audit defense. There are hundreds of very, very funny, very, very tricky cases that we have done. But just for our audience, I'll take a very, very simple, easy example as what they can avoid. So I had an audit last year. This person worked in a restaurant, made $50,000, very, very nominal income, not high enough to be prime target for an audit. And I wonder, why is IRS taking time to audit somebody who's making $50,000? So I got the tax power of attorney signed and I called the auditor. Said, Mr. Kumar, you wouldn't believe it. I said, what happened? Every single expense, every single deduction for his work was in $1,000. Uniform expense, $2,000. Travel expense, $3,000. Meals and entertainment expense, $1,000. Every single expense line was in $1,000. I said, I wonder out loud, how can somebody be that exact that every single expense is listed as is in $1,000? It's just not possible. So if you have a tax return, how much is your donation expense? Oh,
$1,000.
$2,000. Are you sure? It's not 1932. So even if you are estimating something, first you should not be estimating it. But when you are trying to estimate something, try to be exact. Try to keep it a non-rounded number. So this audit that we were defending, which we got actually $50 back from IRS for the client.
Nice, okay.
But the reason, I mean, the client had to go through this mental stress. It's not easy. When people don't really know how the audit works, they get apprehensive, they get scared when they get this audit letter. So for some time, this client was going through this situation, even though the client did not have to pay any money to IRS, the client was being audited because every single expense was in thousands of dollars.
And most of these audits, you basically resolve by being over the phone or just sending documents or something?
A lot of times, a lot of these audits are resolved by sending them the proper information, then doing the follow-up, getting something in writing that the audit has been closed. In some cases, depending on situation, depending on if it's a corporation audit or if it's an individual audit, we will go to the IRS office, take all the support, help them understand the fact patterns. Sometimes it's difficult to explain the fact patterns through the receipts. So a lot of times we have to take the receipts over there in their office, sit with the auditor and walk them through the receipt. So they're just the IRS employees. They are government employees. They have nothing, there is no personal agenda against anybody. They just want to make sure people are doing what they're supposed to. This is what their job is.
Absolutely.
So we just have to sit with them, help them understand this is what happened, this is how it happened, and in a lot of cases,
now while they are doing their job, and we know IRS, Internal Revenue Service, and they've been doing their job, and this is what their job is, to make sure that everything is right on your tax return. There are people who take advantage of that name IRS. And if they send you an email or if they call you at home, we know it's a scam. What do you have to say to our viewers as an alert message or as an advice from you, CPA point, that how to be careful with this phone email scam and not to take them seriously?
That's a wonderful question. I'm glad we are talking about it. And we have a special slide. So if somebody is calling you and threatening you for the jail time, for deporting, or want their money in cash, or in a money order right now, this is a simple scam. You ask them for their phone number. Call the IRS directly. Instead of taking the phone number from the person who is calling you, claiming to be IRS, you go to the website, IRS website, find the number, call for yourself, find out this is my social security number, what do I owe? A lot of time, see the strange thing is all these caller IDs shows IRS. It doesn't have to be Internal Revenue Service. Even if you have Indian Resident Society,
that's IRS.
It turns out to be IRS.
Exactly.
So the caller ID a lot of times will be deceiving, will say IRS. They will give, if you don't believe me, call this number, and you call that number because you're scared, because this is what
they
the
will
tone
just
is.
answer IRS.
They will say IRS or Sergeant so-and-so is speaking. Because, oh, if you don't pay, yes, IRS has already told us about your case. If you don't pay, we are coming over there to pick up your kids. They will try to threaten you. If somebody is trying to threaten you on the phone, this is not how the government works. You call your accountant, or better, call IRS directly. Find out about your case. Don't pay anybody over the phone through money order or through these wire transfer services.
Don't go crazy, and many people have paid thousands of dollars. But anyway, in the end, viewers, we just wanted to alert you with that note, so that way, God forbid, in case if you are one of the victims, then you know that what you need to know.
I tell one more thing. If you have a call like that, somebody is trying to threaten you, you simply say, yes, do you know you owe IRS? Yes, of course I should. I'm the accountant, I'm a CPA, and they will cut your call right away. You tell them you're a CPA, you're an attorney, and they will get threatened. They will disconnect your phone and they will take you off the phone.
There you go. That's a good point. Ajay, thank you so very much
once
again for all your information on why Irs Tax Audit in our today's episode. What's coming up next? I just want to give our viewers a little bit.
Absolutely. Next week we want to talk about donations. Donations happens a lot of times. People are not aware what they can donate, what they cannot donate, what they can claim. Is foreign charity donations are deductible or not? So next topic will all be about donations.
It's a kind of gray area when it comes to donation, right?
It should not be.
It should not be, but it's a kind of gray area.
There is a lot of misunderstanding.
Correct. So we're going to actually help you to clear confusion next week when we meet again for another episode of The Tax Time. Your taxes matter, same place, same time. I am Sanjeev Pandya, wishing you all once again happy and tax-free week ahead. So long.